Hi traders, another episode of Technical Tuesdays this morning, and wow, what a week it has been so far. I mean, just absolutely, markets are so lively. Let's start things off with the dollar. We can see price had a bit of a rally yesterday. The dollar was stronger, flexed its muscles. We saw that candle get up to the 50-day simple moving average, the light blue turquoise line there, that high wick on the candle. So buyers pushed it up and then sellers came back in and pushed it a bit lower in line with that horizontal support there, range support about 95.8. Got a tiny bit of a doji candle in the early morning session now. We'll see if it can push higher from here. The RSI is kind of trying to push up against that 55 barrier of resistance range, which I've drawn in there. Targets wise, I think first initial target on the upside would be about 96.5. We can see there's a couple candle wicks there that showed some price resistance. On the downside, I'd be looking to move back to 95.5, which coincides with the uptrend line here. Moving on to Euro US dollar, back in its range that it's been in since end of November last year, between 113.5 and 112.5. Price is finding a tiny bit of support here on that light blue turquoise line, 50-day simple moving average. The RSI is back below this 52 kind of resistance here. We used to have a couple spikes just above it, and that used to act as a kind of resistance. Yeah, pushing higher from here. First target, I'd say we've got the 21-day exponential moving average, which would provide a bit of resistance. Then just above that, we've got the 113.5, 113.6 resistance there. On the downside, 112.5 bottom of the range, or slightly higher than that. A short target could be 112.8. Pound dollar. Saw a big sell-off yesterday. You know, the pound's quite sensitive to risk, so no surprise there. Cut right through its little bit of support here at 130, 135.5. Got almost right down to that 50-day simple moving average and came back by a step back in. Got a bit of a doji candle. Is risk sentiment going to reverse? We'll have to see throughout the rest of this week. Targets wise, on the upside, it'd be 135.5. On the downside, it'd be about 134 around this 50-day simple moving average. The RSI is a bit in no man's land here at 45. So not really too much information to gain from there. Euro GBP, wow, I mean, just look at that bounce it had yesterday. We know that the euro, a lot of those carry trades are unwound on risk aversion from those high yielding currencies. You have to buy back euros. That helps it. And the pound's obviously high beta. So perfect storm for Euro GBP. Bounced right off that lower trend line of the descending channel. And it got right back up to that 84, 0.84 resistance area. The candle wick almost tagged that 50-day simple moving average, and sellers came back in and pushed it back lower. We've got a bit of a doji candle here while price is below this resistance at 0.84. My initial target would be the 50-day simple moving average, and on the downside I'd look to target back towards this 0.83 area where the lower trend line is of the descending channel. The RSI sort of cooled over a bit here at this 50 level. We saw back previously over here, if you go back to around mid-year of last year, we can see price was capped at this level too. So we'll see if this, given more positive risk sentiment, if Euro GBP rolls lower. US dollar JPY still below its downtrend line, this mini downtrend line here. Found a bit of support yesterday when the dollar flexed its muscles at 113.5. Got a bit of a doji candle here now. We'll see if this level breaks for dollar yen. It'll be quite a key level. I think the next area I'd be eyeing up if this level was to break would be around these lows here in December and November at around 112, 112.6, 112.5. Below there, we've obviously got the 200-day simple moving average at 112. At 111.5. RSI is out of its range. It's sort of rolling over a bit lower. These patterns here, I'm seeing a kind of descending flat-sided triangle. So we get a series of lower highs and lows sort of just peter off and make up this horizontal support line here. Traditionally, this pattern breaks down to the downside, but with dollar strength potentially in the picture, with the Fed meeting, we'll have to see if dollar yen can. There's a lot. yen, there's a lot of short positions out there in the market against the yen at the moment, so we could see a bit of a squeeze, and that could help push through lower. Gold, again, its resilience continues to surprise me. I think there's a couple of factors that are helping it. We've got the RSI that's back up at the 62 resistance area here. We can see how important this has been in the past if we go back. So really key. We're still in that ascending channel. We've got support at 1830, which used to be former resistance. I'd say now targets on the upside would be 1850 and above there 1860, where we saw in mid-November last year. On the downside, I quite like the 18 sort of 20 area, which is right coincides with this just below the 21 days exponential moving average, and basically the upper trend line, sorry, the trend line, uptrend line of the ascending channel, the lower trend line. And then below there, we've got $1,800 where the 50-day and the 20-day simple moving average come into play. Finishing off in the commodity space, oil, it's basically slipped below its uptrend line here. We've got the support at its former high back in the 22nd of October, and we'll see if price can hold that if it does cool over a bit more. The RSI looks to be rolling out of overbought territory. Tiny bit of maybe divergence here. I mean, if you look, it's pretty level. That made a lower high, price made a higher high, but the RSI kind of was in line. So you could say a tiny bit negative divergence. Selling momentum was a bit weak on that push higher there. So yeah, targets wise, first initial target on the downside 85.50, 85.70, and then the 21-day exponential moving average, which comes in about 83.77. Below there, we've got Snowman $80 mark. On the upside, I'd target the $90, which we got up to just about shy of on the 20th of January of this year. And then moving on to I like to always check out Aud-Jpy. It's a key risk barometer, risk sensitive currency. We can see here, it's cut through, it's broken out of its ascending channel, it's cut through some key moving averages there, it's broken through key levels of support 82 250, it's broken through 81.50, and now it's kind of making this doji candle. We got all the way down yesterday to about 80.50, but now price is pushing a bit higher. Again, still some uncertainty. The RSI has still got a bit of room to run if it was to push lower further to get to oversold territory. Targets wise, I'd go back down to 80.50. And then on the upside, I'd be trying to target basically the 50-day simple moving average, or here this 82 former support, which now will turn resistance. I just want to bring up the S&P 500 chart quickly. We can see price did have a hell of a rally yesterday, but it's still below its 200-day simple moving average, which is quite key. And sort of one has to ask, does this kind of lead to the market now selling the rips higher, selling the rallies, as opposed to buying the dips and going long? The RSI, however, is looking to turn around out of oversold territory, which is quite promising. We'll see if there's further push through today and we can close above that 200-day simple moving average, which will be quite key for market participants. There is a bit of support there. If you just look at that dotted line at about 4243, and price is now above that. So on the upside target for the S&P 500, I'd be looking at about, let's say, back around here. There's a bit of resistance here at around 4.5 area. You can see there 5k. Those would be my initial targets. On the downside, I'd look to go back down to 4.3. And then just to give you a quick look at the value rotation ratio I created, which is just the iShares value ETF divided by the iShares growth ETF. We've got the it's rolled over a tiny bit here. It broke through this very strong resistance that we've seen in the past at 201, 2 whatever, and it's sort of got up to 208, 207, and now it's started to roll over again with the positiveness we saw in the S&P 500 yesterday. And then just a quick look at the Fed Fund futures. It dipped yesterday down to about 0.8. It's rallied a tiny bit. Now it's a 0.82, so still an 82% chance the market's placing on a Fed rate hike at March, and we just shy of 4 rate hikes throughout December. April's got about 1.3, July's 2.5, and September's just on the 3 point. Thanks for joining today. That's it. Keep it sharp out there. The market is very volatile at the moment. Lots of opportunities. Um, and yeah, I hope you enjoyed today's version of Technical Tuesdays. See you next week.